So we're transitioning to our conversation about the open trades. I know not everybody's got open trades that date back as far as the middle or even early part of December, but we're going to go through and update those trades. And I'm going to go as far back as that Aussie US that we have on the 21st of November. Okay? And again, I'm going to the daily time frames and I'm putting that volatility analysis here. And as close as I want to get would be that 8107 area. And when I see that we've been up as high recently as 8156, and I've got an 8185, I'm pretty content leaving that there. But if you want to go down to 8155, that's probably fine. Okay, if you want to continue to ratchet. And you know what, 8155 will probably, I would say, if you still have any of that November position, 8155 is good. And it would still satisfy first in, first out if we were to put a closer trailing stop on the November position, but then start to put further ones out on the December 9th and 16th and 30th positions. So if you want to leave those at 8185, that's okay. Okay, that would basically be a 5-pip winner from the 30th entry, but it would be a much nicer winner for the entries that we took on the 9th and 16th. Okay, so if you want to leave that at 8185, I've got no problem. If you want to go as close as 8155, I've got no problem there whatsoever at all either. Again, we're kind of respecting the recent breadcrumb high here from yesterday. So I wouldn't want you any closer than that. And if you want to really ratchet down, 8110 is fine. You know, if you're saying, Raghi, that's all fine and well, but this is going to be a crazy week. If I get shaken out of profit, I don't want to risk that much house money. I'm still building up my account or whatever it is, financial side of account, emotional bank account, whatever it is. If you want to go to 8110, that's fine too. Okay, so that's the Aussie US. All right, next up is the US dollar, Canadian dollar. So as much discussion as I've had about getting in, we still have an open trade on that US dollar, Canadian dollar. All right, who here is sick of hearing my voice yet? God knows I'm sick of hearing myself right now. I've been talking nonstop since 7 a.m. Told you guys I had that meeting with AutoChartist. I'm bordering now on my fourth hour of nonstop talking, and I have a whole new respect for talk radio people. All right, U.S. dollar, Canadian dollar, and we have a current trailing at 1675. That's probably a little too generous. I don't want to be that kind to the house. Recent low, 1729, 1730. I would say I'm actually fine with trailing this thing up to 1745. Those US dollar, Canadian dollar positions, let's lock in some more profit here. Let's go from that 1645 we were at and go to 1745. We're below the PMR. We're below some of these breadcrumbs. But again, I don't want to back off so much that I'm giving back a lot of unrealized profit. That's what I endearingly call house money. We're below the 118 handle, and that's the EPMR limit. And yeah, going below the 50 pip at 1750 works for me. Although I will say we made a recent breadcrumb low at 1729. So, I mean, there's an argument for 1720. But then that would argue 1715, and all of a sudden we're right back at 1695. So if I were to move back down to 1745, realize that that's going to stop us out of those older trades and put us into a new set of trades, and that's okay. I don't need to keep all those trades going. Okay, I think some people think we want to keep all these trades going. No, if we pull back that far, I've got zero problem getting stopped out of the trades that we entered on the 3rd, the 4th, and the 9th. Getting stopped out of those at a really nice profit. I mean, an exceptionally nice profit, 300-400 pips each. And then at that kind of pullback, we'd be talking about BTG buys on the daily. You know, if we continue to pull back into the 1600s, we'll be talking about conservative swing buys on the daily. So I don't mind getting stopped out of one old set of trades and then into another one. That's kind of that rolling, you know, rolling over type mentality that we have in the context of a trend, you know, kind of rolling up. Sometimes you will have open positions and sometimes you won't. Just kind of rolling up with the trade. So we might get out of one set, but then we'll get into another, you know, get out of one and then get into another. So I don't mind doing that. All right. So that is the Canadian, US dollar, Canadian dollar. So we've ratcheted those. Next is the pound versus US dollar. That lone position we have there in the cable from the 16th. We have a trailing of 55.60 right now. And I'm looking at an EPMR that puts me at 51.46. That immediately brings up the context of 51.55. And again, I'm at 55.60. I need to ratchet that thing down. We could be as close as, say, 52.85. We could even be at, say, 53.25. You know, so if you want to just kind of go to 53.25, that's super generous. It still locks in, you know, remember, from 57.50 at 53.25 locks in 425 pips. Even though we're closing in on 700, it locks in 400 of them. I'm still playing with 300 pips of house money. If you don't want to play around with that much house money, I would say go to like a 52.05, but no closer than 51.55. Everybody with me? No closer than that. So we'll ratchet that thing in an effort to lock in some more house money, but we still have a lot of house money at risk. No question about that. Still have a bunch of house money at risk. Okay, so we're updating all these trailings to account for the fact that these trends just keep persisting. We want to give them room to move. That's a good balance between expected price movement ranges, but then also allowing us to lock in increasing amounts of profit and not giving the house back too much. I want the house to be crying at the end of every day. That is exactly what I want. Okay, so next up, those are our existing trades that are in that trailing stop mode. Okay, break evens would come up only with the dollar yen if we hit 119.80. Let's see where we are there. Yeah, still not there. Still not there. So no reason to do anything to the dollar yen. Aussie Canadian dollar, have we seen the 05 yet? And survey says, no, we've actually seen a pretty decent little bounce. So no 05 yet. So those are still, there's no reason to put a break even there. We haven't even hit the first profit target to begin the ratchet to a break even. So everything else, we've just ratcheted on those existing winners that are well past their second profit target. We're putting in that trailing stop, that safety net order in there, updated those. We can continue to just protect those unrealized profits. So, gang, I don't know if I'm sad to say or happy to say, that is a wrap. That is a wrap. Okay? So, we have a busy morning. Had a busy morning. We have the Fed in about 2.5 hours. And choose what events you will allow to pull you into the trade. Euro US, I've got no problem the Fed pulling me into a Euro US trade. But when it comes to the Aussie, the Canadian dollar, and the pound, I'd rather the Fed contribute, but ultimately those other currency events drag me into the pair. Aussie hot zones, Chinese data tonight, okay? Canadian on Friday, pound tomorrow, MPC. So Euro US, I've got no problem with the Euro US and the Fed, but I do have a problem with the others. So Aussie US, I want to take advantage of Chinese data, Aussie data. Dollar Canada, I would rather that trade come with the numbers on Friday, the jobs numbers on Friday for Canada. Forget the US. That's going to fire on both cylinders on Friday. Okay, in the pound US, I want the MPC to be the driver there. So I'm choosing what I'm going to focus on as far as getting me into, pulling me into the market. All right. Whew. Okay, let's wrap it up here, gang. Have a great day.